Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Once again, happy Friday, everybody. Hope you're doing great. Well, the snow is here, so it's finally starting to look a little bit like the holidays, so I hope you guys are staying warm. Well, rates weren't warm this week. Again, we saw rates get worse from where they were last week. Not as bad as what we saw last week, but still, since about a week and a half ago, we've lost over 200 basis points. And actually, the 10-year Treasury has gone from a yield of hanging around about a 1.5% level all the way up to about 2.3%. So big change that's happened. And on the Treasury, that's been over the last about 6 weeks. So big changes have happened in the overall interest rate environment, and just a whole lot of volatility. We saw a ton of economic data introduced into the market. We did see retail sales come in, and that showed an increase of 0.8%. That was a little bit better than the expectations of an increase of about 0.6%. We also saw the producer price index come in, and that showed the headline number was unchanged, and the year-over-year number was up 0.8%. The National Association of Home Builders released their confidence index, and that showed unchanged at 63. Anything above 50 is actually a pretty good number. Now, weekly housing claims, weekly jobless claims, that was a blockbuster. It was real low. It's actually the lowest number in 43 years, and we're now at the 87th consecutive week where the jobless claims numbers were under 300,000. And so that is, and anything under 300,000 is considered good. So we're on a pretty good streak of low jobless claims. We did see housing starts come in, and that was a whopper. That showed an increase of 25% over the previous month. So housing starts are on a tear. Building permits were also up as well. And that showed an increase of only 0.3%. And then we did see the consumer price index come in, showing that that number wasn't very high. It was up slightly, but not a whole lot. The big news, though, of the week was actually Janet Yellen was testifying in front of the Joint Economic Committee in Congress. And basically, she prepared everybody for a Federal Reserve rate hike. It was just... You could tell that's what she was preparing the market for. And actually, Fed futures rates now are at almost a 90%, are giving a chance of almost 90% that the Federal Reserve will be increasing credit by what expectations are about 0.25% again at the meeting later on this month. It's going to be happening just in a few weeks here, and I'll keep you informed with what's going on there. But the market's really going to be trying to figure out right now, what is the pace of future Federal Reserve increases. And I'll keep you informed as to what's going on, but we're going to see some continued volatility here up until this Federal Reserve meeting. Rates are likely to continue to be under pressure to get worse. So it's just a lock stance and just take these. The rates are still wonderful. Take them while you can get them before they continue to go up a little bit. We might see a bit of a reprieve, though, once the Federal Reserve actually does hike credit, if they do that, because that's what we've seen the last couple of times that the Federal Reserve has increased credit. So thanks for joining me with Java with Jared. I hope, again, you guys stay warm. And if you have any questions, give me a call. If you're working this weekend, so are we, and we'll talk to you soon. All right? Bye-bye.